Today, we're going to talk about what has gone on since the election has happened. Is the market doing well? Is it doing crappy? And where does that leave us with mortgages?
I feel like prior to the election a few weeks ago, there was buyer confidence was like at an all-time low. For some reason, it was almost like analysis paralysis. Hey, I don't know what's going on. I'm doing too much research. I think this is what's going to happen.
And I feel it's the same.
There are times where people will ask me what their mortgage payment is, and I'll tell them what their mortgage payment is. And they're like, oh, that's good. I'm comfortable with the payment. Then they'll say, what's the rate? And you tell them the rate, and all of a sudden they're not okay with it anymore.
People are so fixated on the rate that they're not looking at the whole picture. And that's a problem. The thing is that we have something that will never go away: inflation. It will never, ever go away.
I think Florida is a different beast when it comes to this
It used to be the
stuff.
cheapest place to live. People would talk about how cheap it was
It's because it was so undervalued. People didn't realize until COVID, I don't know why, people in California, for example, I can go live here with similar perks, right? And be near the beach and be on the water and not have to worry about the snow and all of these things for half the cost. And there's no state income tax. So it's like, why wouldn't I do that? It took a national pandemic. It was almost like Florida was like undiscovered land.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy little world that we live in. Today, we're going to talk about what has gone on since the election has happened. Is the market doing well? Is it doing crappy? And where does that leave us with mortgages? So today we have our awesome sponsor, Max Fisch, and we are going to talk about mortgages. And he is with Nationwide Mortgage, and he is top 1% in Florida for mortgage lenders, or brokers, I should say. Yeah. And for you, that means that really everybody's coming to you.
Yeah, I mean, it's funny, and I'll just touch on this briefly, right? In our business, whether you're in the realtor side aspect of it, or you're in the loan side or title, whatever, I think the key is just your yes being yes and your no being no.
Okay.
I think that's really super important, because I tell people, you should want to hear no from me, right, as an agent, because if I'm telling you no, it means it can't be done, and I'm saving you a ton of time. Right. And if I tell you yes, then it absolutely can be done. And I think that's
I think you have a couple little extra navigational ways to get that yes, right?
Yeah, absolutely. It's just about being creative and being able to take a situation and honest. Yeah, absolutely. So
back in my day, creative meant
that totally different time. No. So we're in an interesting market, right? Because we're in a market where I feel like prior to the election a few weeks ago, there was buyer confidence was like at an all-time low. For some reason, people just didn't. It was almost like analysis paralysis. Hey, I don't know what's going on. I'm doing too much research. I think this is what's going to happen.
And I feel it's the same.
Yeah.
I don't think it's changed.
No, and it hasn't at all.
I think they're waiting still, like, well, what's going to happen? Well, what, you're going to wait till January till he gets...
It hasn't at all. And it's something that I say all of the time on this show and in different conversations that I have. And that's just that the financial landscape of people's finances, the X's and O's, are at 20% actually math. And 80%, it's just your mental and how you're viewing things and your perspective, right? And I'll give you a perfect example. I'll give you a mortgage example.
Okay.
There are times where people will ask me what their mortgage payment is, and I'll tell them what their mortgage payment is. And they're like, oh, that's good. I'm comfortable with the payment. Then they'll say, what's the rate?
What's the difference in the rate?
And you tell them the rate, and all of a sudden they're not okay with it anymore. And it's like, well, wait a second. You were okay with it when...
Isn't that how a car salesman sells a car, though?
You just knew the payment.
Right.
And I'm not talking that this is a tactic or intentional. It's just sometimes before people ask what the rate is, they ask what the payment is.
Right.
And you tell them what the payment is. And then when you tell them what the rate is, they don't like it anymore. And really what that comes down to is it's not actually about what a payment is in a lot of scenarios. It's just about the perspective of, I don't want that specific rate. Or
so
I look at it
funny,
a
right?
certain way.
You should say, people will tell you a rate, right? And it makes you happy when you hear that lower number. But are you looking at the whole picture,
No.
right?
And it works vice
So,
versa, what you're saying.
There was a Friday night about a month and a half ago. You and I were on the phone, and it was pretty late. I want to say Friday night. We're losers, right?
Yeah,
I mean, you're a millennial, at least. I mean, you should be out, man. Like, I'm old. Like, that's okay if I'm,
Yeah.
So we're talking on the phone. It's late at night. It's 9:30. We're going back and forth on numbers, right?
Yeah.
Well, one of those loans closed, and I saw the fee that was not on there when we were going over the numbers. And I told them, I was like, listen, I've dealt with this person before. This isn't going to be what you're going to get in the end.
Yeah.
And in the end, it was something totally different. Now, I don't know how all that's getting through with TRID, and I'm kind of a little shocked. I'm not shocked that it happened. I told them that was going to happen.
Yeah.
I wish people would really listen to me and know that when I say, hey, look at this or do this, that they would understand that I'm really guiding them in the best way possible. I'm never looking to hurt anybody. I'm never looking to direct you in the wrong way. I'm using the same people that I'm directing them to.
Yeah.
And I've used some of those other people in the past and knew that this is, if I've had a personal experience, not my client, me, I think you should listen to that. But people are so fixated on the rate that they're not looking at the whole picture.
Yep.
And that's a problem.
Yeah, I mean, it's odd because I feel like in the mortgage and real estate space, you get a lot more, I wouldn't say, there's a lot more bargaining that happens in that space. And I always ask people, I say, if you're getting your pool redone, for example, and you get 5 companies out there, are you just closing your eyes and just going with the lowest one?
No, I think you need to.
You have to take other things into consideration.
Right. Reviews online.
How quickly can they do things? Are
Right.
they answering your questions? Are they being attentive?
Are they returning your phone calls?
Is their product good?
Right.
Like,
Right.
what's their history? What's their track record?
In the end, for you, once it closes, right, they can still call you for questions.
Absolutely.
But forget about that. I mean, once you close, it doesn't matter about the mortgage company per se, because
it's the process.
Right. It's the process getting to that.
Yeah, absolutely. And so, I'm always pretty transparent. I'm okay with even saying it on here. I try to be, if you got 20 quotes, I'm confident I'll probably be top 3, lowest, top 5 maybe, right?
20 quotes, that's a lot of work. Oh my God, I want to take a nap for that.
No, and some people do. But if you get
That's
top
crazy.
5, I'll probably be somewhere in there. But I try to be the lowest that I can without sacrificing other aspects of my business.
Right.
Right? Efficiency, transparent communication, those types of things. And to run a company that is,
Profitable,
sufficient
first of all,
and
too.
profitable in those areas, you have to be able to find a healthy balance. Where I feel like that people right now, and I guess over time, have adopted this mindset of, hey, let's race to the bottom.
Yeah.
Let's race and see who can get to the absolute bottom, right? And I just feel like that is a mindset that gets people in trouble contractually. There's banks and title companies that don't meet contractual deadlines. There's hidden fees and costs. There's a lack of transparency, a lack of communication, and all of those things are valuable. And I just feel like, especially, talk about millennials, I feel like that concept and the value that all of those intangibles bring is being, year after year, less important. It's all about bottom line. It's not about handshake agreements anymore. It's not about...
No, there's none of that
Yeah,
anymore.
it's not about...
Let me tell you something. I've had a week. I need therapy.
Tell me.
No. First of all, it's people telling me, I'm giving you my word. Their words mean nothing.
Yeah.
I commit to people. I take away from my family. I take away so much. And then it's like they say, oh, well, I'm going to do this. And then they don't.
Sure.
And it's just mind-boggling.
Yeah.
But we're going to go to commercial break, check out our sponsors, and when we come back, we're going to talk. What is the confidence of the buyers in today's market, and what does it look like? So stay tuned. We'll be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations, ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. We are talking about buyer confidence after the recent election, now that Trump is president, and he always seems to be that it's thought that he's good for real estate. So we're talking about buyer confidence. I personally think it's been a little quiet. Or maybe it's just the same. I don't know.
I mean, it's really tough to know. I think our market over the past 2 years has been solely driven. I might be biased a little bit, but I think it's been solely driven by interest rates. Like the months where rates dip a little bit, there's activity.
But
and then,
how are you going to find a house? There's I have to tell you, it feels like there's not a lot of good inventory out there.
Yeah, I mean,
Tons of condo.
I think, and you would know better than me on this, so you can correct me if I'm wrong, but I think at this time of year, historically, there's really not much.
So
right?
maybe it is a good time to list your home right now.
Yeah, right?
Maybe I'm wrong. Maybe I always say, oh, you don't want to run days on the market. People are busy. They're doing things. I don't know what to say anymore. I'm kind of lost, even being that I've been doing this for a million years.
Yeah. Isn't January one of the busiest listing months, though?
Yeah, so I always say, come the first week of January, like the 7th or something, right? People make New Year's resolutions. Like they're ready to make decisions. And here's what the other day, I had a family that I sold them a house back in, funny enough, 2012. And I went to the property appraisers to look up their address because their daughter had been in a serious accident. And I wanted to drop something off at the house. So I pulled up their name on the tax records and I looked at what they paid for their house. And I was like, that was like genius.
I know.
So the thing is that we have something that will never go away, inflation.
Yeah.
It will never, ever go away. And if you go back, like when I could buy, I don't know if you've ever seen these before, the little bubble gums with the wrappers with the jokes on them.
Yeah, I know what you're talking about.
Okay.
Yeah.
So it was 5 cents a piece. I think they're like probably 50 cents a piece if you could find them anywhere, right? I mean, if you were to buy a box of them and there's probably 10 in there, the box is probably $3.99, right?
Yeah, I mean,
the bazooka thing. So like if that's $3.99 for 10 in the box, that means that you're paying what, 39 cents a piece?
It's insane. I mean, you can't go to now if you go to fast food, you're spending over $10 for a meal.
More than that.
Easily.
Yeah.
It's nuts. But the thing about it is that as it pertains to inflation in real estate, I feel like that there's a new baseline. Meaning like if it's almost like we restarted with a new foundation.
Okay.
And what I mean by that is it's not going to go back to what it was.
No, and that's what I'm trying to say.
Yeah,
It's like,
I'm agreeing with you.
Buy today because in 10 years from now, you're going to be kicking yourself in the butt when you look and you say, I should have bought that house.
Yep. There's a new bottom. There's really a new bottom.
And I had this conversation with somebody last week, or one of these weeks, talking about like short sales.
Yeah.
2005 was like it went crazy. 2007, 8, 9, and part of 10, people were short selling their properties. I get it if you couldn't afford your mortgage. I get that, right?
Yep.
But if you could afford it, and the ones that stuck with it, and I had clients that stuck with it, it became worth so much more and they made money. You have to live somewhere. You're going to pay rent.
I think Florida is a different beast when it comes to this stuff.
It used to be the cheapest place to live. People would talk about how cheap it was
It's because
to come to Florida.
it's because it was so undervalued, right? Like they didn't
value the sun.
Yeah, well, people didn't realize until COVID. I don't know why, but people were like, "Hey, wait a second. I can go." People in California, for example, I can go live here with similar perks, right? And be near the beach and be on the water and not have to worry about the snow and all of these things for half the cost.
Yeah, I mean,
You know, and there's no state income tax.
and there's no earthquakes.
So it's like, why wouldn't I do that?
Yeah.
And it almost took it took a national pandemic for people to it was almost like Florida was like undiscovered land.
Right, but you could work from home where you couldn't before, and you were going into
Sure.
So
yeah, I mean that changed the landscape a lot. But Florida in general is just a hub for business and a hub for, it's very business friendly, very real estate friendly. There's a lot of tax advantage. I mean, so there's just a lot of things that being in Florida kind of mask us from, because I do loans in other states, and in those states, I mean, back in 2012, you might see a house that was bought for $200,000 and now it's worth $280,000. 12 years later, So
where's this at?
Just in different states, all over, different parts of Virginia, different parts
Virginia.
of
I mean, it's freezing.
of Indiana. Yeah, but I'm just saying it's funny because in Florida we look at it and we're like, wait, what's going on? But we're in like this bubble of what's going on here.
It's a beautiful bubble.
Yeah, I know that nationally speaking, there are places that haven't,
They're not seeing their potential.
No.
So we're going to have to go live there if we don't make enough money here.
But things start to move up. I mean, we've already seen it. I'm sure that you've done transactions in Port St. Lucie area and Vero Beach.
And it's picking up. Listen, let me tell you something. Vero's not cheap anymore.
Oh, I know. And it's just going to keep squeezing up and up and up and up down the coast.
Yeah, I was looking at houses the other day in like Stewart, just looking, Palm City, and I was going, holy cow, this is expensive.
Yeah. I mean, people are starting to see, okay, I can buy a house cheaper and my mortgage payment is $800 a month less because insurance is an eighth of the cost.
Insurance might be cheaper there, but the taxes are still staying the same. You got to get to like Orlando.
Yeah, taxes are similar.
Or go to Key West, but then insurance is going to make up for that taxes.
Yeah.
But
I just had a very close friend of mine. He purchased a home in Orlando, $1.1 million home, and his insurance was $1,500 a year.
Oh my God. And the taxes are only 1%.
Yeah. So, I mean, just right there. I mean, if you bought a home like that here, $10,000 a year probably.
What other states do you do mortgages in?
49 states other than New York. New York's the only one that I don't.
Why?
New York's a different animal when it comes to getting a mortgage license, and the way that they do real estate is very different than a lot of other states. And it's almost like I do loans, but I would almost have to relearn how to do everything.
Interesting.
With doing lending in New York.
But so can you do hard money lending there?
Yeah, I can do hard money lending anywhere. Yeah.
Okay. But no, this is important stuff to know, so that we could tell, so if people are thinking about, hey, because there's a program that I want you to tell people about, before we end today, that I think is really important for people to know that you have it, because not everybody has that. And that is the program that you said that you didn't need any income.
This is primary.
Primary, not the DCSR loan. Did I say it right?
DSCR.
I have a problem with that.
No, the no income primary is awesome. So really how that works is you need to have higher than 680 credit score.
Okay.
And
we can help you. We can refer you to somebody to fix your credit if you need it.
And you need 25% or more down.
We can set you up with never mind.
And that one's a little harder than credit score. And really the only qualifications for the loan after that, title, appraisal, and insurance. There's no job history needed, no income required. Now, to be fully transparent, the rates on those are higher than typical.
Okay.
Right?
And what are we looking at rates today? Somebody with
conventional?
let's say 700 credit score, conventional loan.
Upper sixes.
Okay.
6.75 to 6.99 depending.
Okay.
Which isn't, and that's with no points being charged or anything like that. So that's, that's a good range. But this no income primary loan, I mean, if you have the down payment and your credit's over 680, slam dunk. Yeah, those are the only qualifications.
And what are we looking at on that for interest wise?
Mid to upper eights.
Okay. I mean, listen, if you don't have...
Yeah, so it's perfect for somebody, let's say they just became self-employed earlier this year, they don't have the 2 years, can't go bank statement.
And they need a place to live.
They need a place to live, they can do this.
And then
once they have, there's no prepayment penalty, and they can just refinance.
Okay.
Yeah.
Any like great stories that you have to tell us? Like anything crazy happened to you lately in the mortgage industry that you thought would be good to share with our audience?
I wouldn't say crazy, but there's some good, cool things happening in the mortgage world. It seems like the archaic entities like Fannie Mae and Freddie Mac and these entities that have just been around a long time, it seems like they're starting to modernize things.
Oh, really?
Yeah, like
In
for
what way?
example.
Okay, yeah.
So for those of you who don't know, I know that you're fully aware, appraisal waivers are sometimes granted on homes, right? And prior, you could only get an appraisal waiver if you were putting 20% or more down.
Oh, okay.
Now it's 10% or more. So they've loosened their restriction to say if you're putting 10%, you're eligible potentially.
And how do they
for an appraisal
determine
waiver.
that? What do they utilize to determine?
They're pulling a bunch of factors in their algorithm. Area, location, purchase price, down payment, credit score. They're taking the full financial picture and they're determining how comfortable they are with
even with
the
20%
purchase.
down, they don't necessarily give up an appraisal.
You're not
waiver.
guaranteed, no. But before, you couldn't get it unless you were putting 20%. Now you can do it at 10% or more. And how that helps, and that helps agents and buyers is, if you go into a property, I get calls all the time from agents that say, hey, is this property financeable? Right? It has the X, Y, and Z. Well, it's not going to pass an appraisal, right? But that doesn't necessarily mean that it has to go cash. Because if a proposed buyer has an appraisal waiver...
Does a buyer get the appraisal waiver or just the property?
No, the buyer does.
So wait a minute.
Based off of the buyer's profile.
Really?
Yep.
And what are some of those things in a profile that would create that?
How much are they putting down?
Okay.
What their credit score is, what their payment history is, the amount that they're purchasing it for.
So you would know this when? When would you know about an appraisal waiver?
As soon as somebody fills out an application, if they authorize me to do a hard credit pull, and there's a property in mind, I put the property address in there, I run it through an automated underwriting system, and it tells us if we get an appraisal waiver or not.
So do you think that some people want still to have the appraisal because they're nervous?
Some people do, but when they understand why they're getting an appraisal waiver, it makes them feel a little bit better. How I explain it to people is the bank is the one lending the money, and they're the one that requires an appraisal, right? They require an appraisal because they're concerned with the purchase price that you're buying it for. If they're literally saying, I don't need that, I'm not concerned with it.
Yeah, but it's not, you said it's specific to the person, not the property.
It's specific to the person's profile with the property.
Oh, okay,
address.
so if they change the property, that could change.
Correct.
Okay,
Yep.
that makes a little bit more sense.
So it takes all of those things into consideration, their financial picture and the property.
Okay. So if they
Yeah.
change the property, that could change. So they can't go off making an offer saying
No,
not
no,
subject
no.
to appraisal
No,
or
you have to
anything
run
like
it every
that.
time you have a new property address.
Okay. So that makes sense. Okay. So in the end, when we're talking about buyer confidence, what are you seeing?
I'm seeing that post-election buyer confidence is high. I mean, to be honest with you, that's why rates have gone up a little bit, is because if you were paying attention after the election, the stock market shot up. And that's because all of these businesses, all of these investors, they're very high on stock futures.
Okay.
Right? And so that kind of correlates to the housing market and people saying, oh, now is when I'm ready to buy. Now is a good time to buy. There's going to be good things that are happening. And again, it's just all perspective and it's kind of all mental.
Right.
Yeah.
Well, if you're thinking about buying or selling a home, definitely give me a call. Laura Sanders, Remax Direct, 954-650-0827. Or you can look me up on my website at laurasell.com. And the best way to get a hold of you, Max, if you're thinking about buying.
Yep, is my personal line, 954-729-6933. Call or text me anytime.
And the good time to buy a property is anytime, as long as you can afford it. So, till next week, thank you for listening to Making Money with Laura Sanders. Till next week, have a great night.